and welcome to Closing Trades right here on ET Now with me, Aisha Faridi, and it's pretty upbeat today, much unlike what we've seen all through this week so far, at least, where there's been a clear disconnect in terms of the global market handover and what our markets have done, which is pretty much nothing at an index level. Today, you're seeing finally a bit of an upbeat move coming in. At least we scaled it to that 19,400 mark, again ebbed off from the peak of the day. Having said that, it's the broader markets once again which are outperforming the benchmarks. The mid-cap index continues to scale in fresh highs. It's PSU banks, OMCs, which are the only drags, frankly, in the market. All sectors are actually chugging along quite nicely. A couple of, small segments in the market. Packaging stocks, for instance, they've been rallying on the realignment of supply chain, which we're gathering from our channel checks. Of course, within the broader end of the markets is Indian hotels, a fresh move. 4.5% or rather 5.5% higher for Indian hotels as we speak right now. There's RBL Bank scaling higher by 4.5%. Hindustan Copper, which is up 4.25%. Escorts has made a very smart move, and Jubilant Foodworks as well, which is seeing a solid 4% move in trade today. That said, within the large caps, it's Tata Steel, which is right up there at the top of the pack, 2.25% uptick coming in there. M&M has seen a further move. It's now inching closer to that 1,600 rupee per share mark. There's Tata Consumer, HCL Technologies, LTIM, and Maruti, which are all holding up and scaling up quite nicely. So let me bring on board Naresh as well as Kunal and find out what they're making of the trading structure so far. Of course, we'll have our fundamental expert as well join in just seconds from now. Kunal, what do you make of today's market move? I mean, one thought we could hold on to 19,400, but it's unable to do so at the higher end.
Yeah, but then I think hopefully if we sustain about the 19,400 mark, we could break past about the 50-day moving average. Now that's the more important technical level which I would be watching out for, because historically we've seen that whenever the indices have managed to float or trade above the 50-day moving average after a mild correction or a mild phase where the indices have been trading below this critical moving average, we've seen that the uptrend for the indices typically have resumed. So that would be more of a litmus test for the index. So far, we are holding about that 19,400 mark. And for this trade, I think 19,300 would be a closing based stop loss for the index. So it's a very tight 100-point range which you're talking of, or a 100-point trade which you're talking of. So 19,300 remains to be a stop loss for this long trade on the index.
19,300. 19,300 is the stop loss.
Yeah, for this long trade.
On a scale of 1 to 10, 1 to 10 scale, what are the chances that this time we'll break the range?
It looks like that we would probably break the range on the upside. It looks like
more than 50%.
Yeah, more than 50%.
Okay, Naresh, it's just been a very yo-yo kind of a market, and frankly, it's not been a market where traders can say that they've got a pronounced trend on the upside and also on the downside. Do you think this week's price action based on yesterday and today is slightly different?
So if you look at it today, we've hit a new all-time high on the small cap index. We've hit a new all-time high on the mid cap index. We are 1%, less than 0.5% away on the Nifty 500. So the case is we are not seeing the move on the index because the heavyweights are not going anywhere. So when you have the whole of IT, then you have Reliance as well as HDFC Bank. Reliance and HDFC are 25% of the index. If they are not moving up or moving down, and you add another 13% from the IT index, then you have Kotak Mahindra Bank and some more heavyweights. There is no trend. But if you look at everything apart from the heavyweights, it's been doing well. So the case here is if the whole, even the Nifty total market cap, which is like 750 top names, is also closer to an all-time high. It's just say maybe almost there today. So in that case, what do we do? Wait for an expectation that you can eventually break out about 19,550, 600. So the bias is positive. You just need one of the heavyweights to actually show a little bit of a move for the upward breakout to take place. So for now, 19,300 becomes a stop loss. Add on the way up about 19,600.
Deepak Shanoy joins us now. Deepak, the market was overbought a month ago. The market is overbought right now, and the market could remain overbought for a month from now. What is the best strategy to deal with this kind of a market where frankly you can argue that valuations are expensive, flows are volatile, but if you're not selling, you are actually making more money?
So, Nikunj, I think the market isn't actually overbought in the sense that its earnings have considerably grown compared to previous year, the same quarter, and you're about at nine. I mean, the Nifty P ratio is all wonky because the Nifty, the way they calculate the P ratio is they add up the last known earnings of the constituents. The last known earnings of HDFC Bank did not include the HDFC, which it has now merged with. So HDFC is no longer in the index, but its earnings are not getting considered as part of the Nifty earnings, and therefore P ratio looks a little bit higher than it is. It's about 22 to 22.5, but it's actually about 21 times trailing earnings. I think this is not a very expensive point, so therefore I don't think it's overbought in any meaningful way. I also feel longer term that the scope for the Nifty and generally the markets in India to go up are tremendously high, simply because in relative terms we seem to be in better economic shape as a country. Corporates are relatively less leveraged, and overall I think the triggers coming in the future will be relatively, if inflation were not to spike going forward, gives the scope for interest rates to correct, and therefore the economy to get some kind of a respite. But that will probably take a year, for it to show up. Right now, it's only a part of a capex and infrastructure cycle that seems to be moving earnings up at least.
Look at all the hotel stocks. That's where all the action is, right? Indian Hotels is sitting right on top there, 5.5% higher. EIH, etc. also should come off you on your screens. Kunal, what a breakout move on Indian Hotels.
Yeah, very good breakout move for the stock, and I think it's come after almost 3 months, if I'm not wrong, in the month of June, July, as well as good part of the month of August. The stock was into this 20 point, 25 pointer range. 380 or 378 was the support, and 400, 405 as a resistance. So this looks like a very good move, because when stocks go into a 30%, 40% rally, then a 3-4 months of sideways correction, stuck into a 5-6% trading band, that's generally considered to be very healthy for the stock price. And I believe now the stock should see a strong up move. Volumes today also quite attractive, and the biggest part is that this move comes into an expiry week. So if there over the last 2 or 3 expiries there have been, say, short rollovers or traders who are not willing to participate into the stock price, all of that changes on the expiry week, because traders are willing to carry forward positions after you see such kind of a strong breakout for a stock like Indian Hotels. So would be bullish on the stock.
Well, it seems like a case of basket buying. I mean, look at Lemon Tree, Chalet, etc. as well. They too are scaling up higher by about 5% apiece, really. Look at that chart of Lemon Tree hotels today. Chalet as well spiking up by 3%. Lemon Tree was up 5%. So all these stocks are really on a tear as we speak right now, led of course by Indian Hotels, the largest of them all within the listed universe. Well, call it what you may, the upcoming holiday season, or for that matter, World Cup. I mean, clearly all of these stocks are excited. Everything from a Zomato to Jubilant Foodworks too.
See, markets always preempt something which could happen. That's how markets move. Like you always say that don't focus on where the puck has moved, but focus on where the puck would move. Will the puck move in favor of in favor of tourism for next couple of months? Will it be strong for food delivery? If India at the World Cup starts, will there be a binge order for biryani, pizzas and food delivery? The answer to that is absolutely yes. Has commodity inflation started coming down, especially on the vegetable front? The answer to that is yes. Tomato prices, onion prices, have they started coming down? Yes. Milk prices have started coming down. So there is a big case now to buy into commodity producers. There is a big case now to perhaps revisit some of the, let's say, liquor stocks or food delivery companies, or essentially categories which would benefit because of cricket or celebration or festive season. And I think that clutch, would be important. Aisha, there used to be a time when you would say, okay, festival season means more car sales, more AC sales, more clothes sales, more watches. But the uniqueness of this economy is that it is changing. And now celebrations and now holiday season may coincide with just better travel. It may just coincide with, better dining out options. So your basket of consumption, which was, let's say, concentrated only in and around buying white goods, mobile phones, which will continue, I guess is also diverting towards these new categories. And that's where I think the gains, are visible. And that's what markets are telling you.
Yeah, Deepak, what are you making of the aspirational Indian who now wants to holiday more and holiday better, buy better cars and better phones across the board pretty much?
Premiumization, as we call it, it is happening in a meaningful way. I think income levels have gone up, at least for a relatively small percentage of the population, but that is really the India that can be targeted in a meaningful way by most of the players that you mentioned, whether it is cars or food delivery and all of that stuff. It's affordable to about maybe 2% or 3% of India's population per se. So that and the households, about maybe 1 crore households are roughly what it is. But it's actually happening where they are actually pushing the one level higher, and what used to be a 100 rupee dish is now a 150 rupee dish on average if you're ordering from a food delivery service. And you see the prices of the IPL tickets, or if you see the prices of movies, or you see the prices of whenever they announce it for the World Cup tickets. I think we'll find we will be surprised by how much Indians are willing to pay for entertainment, tourism, and travel. I think it's a very big sector. I think this premiumization is partly coming out of COVID, where incomes got generated but not spent, but also coming out from the fact that the prices of these goods haven't increased in any meaningful fashion. The people have been able to upgrade their income, so they have been able to afford this more. The best-selling Indian car is not the Maruti cheapest car anymore. It's the Tata Nexon uh, on a single brand. So that's also surprising, because you'd never think an SUV or a Cross would be the highest Indian selling brand, but it's happening across the board.
We were just chatting with Shashank Srivastav as well earlier today, and he said that Maruti's inventory levels are sitting at a 4-year high, and it's not the sedans but the SUVs which consumers are making a beeline towards, and of course all their new launches as well. Let's hear out a sound clip of what he told us.
Have certain models which have got excess inventory, sometimes going up to 50 days of stock as well. And there are others where you still have pending bookings. In other words, there is a waiting for those models, and therefore very low inventory. Clearly, however, since July, we have seen a uptick in production in even those models which were earlier in short supply. A couple of years have been pretty tight as far as inventory is concerned due to various reasons. COVID lockdown, you had supply chain disruption, semiconductor crisis, and so on and so forth. But yes, the last time we saw this level of inventory of almost 300,000 in the industry was in September 2019. So that's really a 4-year high. But expectedly, because people are preparing for a large retails in the upcoming festive season. So I think that's a normal phenomena where inventory is built up in the channels. SUV has been growing. It has grown from roughly 26% 4 years back to now almost 49% last month. So cumulatively this year, it is 47% of the industry. Expected to grow even further coming years, expected to plateau around the 52-53% mark. So it's going is now the largest segment of the overall market. 2 years we haven't seen discount across any model because all models were in short supply. But as we discussed earlier part of our conversation today, there are some models where you have excess inventory and excess supply, and those are the models where you will see discount.
Okay, what's not looking good today? Interglobe Aviation, that's definitely one stock which is lower. There's Power Grid as well, which has fallen. There's BPCL, which is down about 1.6% along with HP. And there's India Cements, which is down by about almost 2.5% as we speak. The buying has been pretty sporadic. I mean, you can't really pinpoint a trend, but yeah, IT is actually seeing some gains. So both Infi, LTIM, and some of the mid-cap IT names as well are the ones which are showing some buoyancy. What is Reliance up to, considering it was quite the damn squib post its AGM, and that was pretty much the follow-through action? Continues to be flat for RIL, still down, around those 2,400 levels. Deepak, what do you do with RIL? I mean, from the AGM, there were no near-term triggers, always a long-term vision, as it is the case. But what next for RIL shareholders?
So we are an RIL shareholder. So in a sense, we're also part of the people who are looking forward to what's coming next. I think the story here has two parts. One is Reliance's own capex and expansions, and they're doing some in the I think they've mentioned it over there. They've talked about moving more into solar, into generation. There are some updates about what they're doing with green energy. There is also expansions on the retail front and so on. The second part is the demerger. I think the eventual demerger of Jio, the telecom business, and retail, the retail ventures, which is the retail business. I think that will be a trigger for Reliance to kind of break out of this zone. It's going to take some time. I think, right now, until they show it or demonstrate in the results, they've actually ended up with about 75,000 crore of capex. That financing of it will be now at a higher rate compared to what it was. But when Jio Financials actually starts operations, that might stabilize a little more. So it will take about a few more years before a lot of these announcements come into play. I think one has to think about it longer term. In the short term, I don't see anything meaningful, unless, of course, tomorrow they unveil something on AI, which is dramatic or something. They talked about it, but I haven't seen anything, actually out there that's visible yet. So I think I'll wait. We have a large position in it, but we're willing to wait a long term for it.
We've been highlighting OMCs and the fact that they're a big drag on today's markets. But Nikunj just had a conversation with Petroleum Minister Hardeep Singh Puri, and he talks about crude prices and the status of OMCs amid the cut on LPG prices.
The price of crude oil is determined by a global situation. We are dependent up to 80% of our requirements on imports for crude oil, about 55-60% on the import of natural gas. Our OMCs incurred a loss of 28,000 crores. Now, they are not operating on their own money, they raise money in the market. So you had to compensate them. So that 28,000 crores was compensated up to an extent of 22,000 crores. If you are to insulate the common man, I mean the economically weaker sections, the people who live below the poverty line, then both the government and the OMCs will have to do it. It's not as if the OMCs are collapsing. I can say with a degree of satisfaction that the OMCs today have registered very reasonable and healthy financial results. I'm choosing my words carefully. There are quarters when they do better than other quarters. But I think when the Prime Minister decides that the price of a cylinder, a 14-kilo cylinder, has to come down on the occasion of Onam and Raksha Bandhan by 200 rupees, the OMCs are happy, the country is happy. OMCs have large businesses. Some of them make big profits in a quarter, some less. But they're all doing reasonably well.
The list of winners and losers today, and today for a change you don't have the defense names which are doing something special. They're not doing cartwheels. BHEL has moved independently of what's happening in the mid-cap space today. That's BHEL for you. It's chugging along very, very smartly. But I want to look at defense stocks, HAL, BEL, BHEL, Mazgaon Shipyard, Kochi Shipyard. That entire cohort or defense stocks today are not participating, if at all. I think they're reversing from the day's high. Cochin Shipyard is a reversed. And Mazgaon Shipyard, which is up, 100% in last 1 month, Kunal? The YTD change for Mazgaon Shipyard is 130%.
That's more than 100%, correct.
Right? Where's Mazgaon Shipyard? Let's look at it. They're still making ships. They have not started making aeroplanes. Aeroplanes are still made by HAL. I don't know why do markets get confused. But the way the stock has gone up, it's just been an amazing run. Zomato, 100 rupees, hit a century, the overhang of SoftBank and the stake sale from Tiger Global, that seems to be getting diluted now. Fresh buyers have entered, old investors have exited, almost at 100 rupees last when I checked. I mean 99.85, you may want to call it 100. But on the Nifty now, you have a very sharpish kind of a reversal led by the Bank Nifty and led by HDFC Bank. And once again, Uresh, HDFC Bank has disappointed.
So it just continues to be a stock which has been at the same price for almost now. If you look at today's price at 1580, 1590, it is where it was in say 2023 of May, 2021 of say May, June. So the last time the stock was at 1590 was back in Feb, March of 2021. So the stock has gone nowhere for the last 2 years now, or even more than that. And we don't have a trend on HDFC Bank. And this continues to be 13-14% of the Nifty. And that is where the problem is. We don't get a trending move till the time we don't get at least one of the heavyweights to do well. The only case is it's not breaking down as well. So the last time we saw a big gap up move on the stock last year was when it gapped up from 1550 and went towards 1600, 1650 levels. The dip in March also this year was closer to 1530, 1550. So the trend does not become weak till the time we don't break 1530 levels. And on the upside, till the time we don't break 1700, 1750, the longer term trend does not change. So in the short term, disappointing. In the last 2.5 years, been sideways. And even going back to pre-COVID, the returns are not great. The stock used to be 1250, 1300 in 2019 to 2020. So it's been a major underperformer. How long does it stay is difficult to say. The last few times it came to 1700, there were hopes. So for now, we'll wait. Whenever it crosses 1700, that's the time to look into it, or say if it breaks 1530.
Let's look at what Zomato is up to. Remember earlier today, you had 10 crore shares change hand in a block once again. SVF Growth Fund is the likely seller that's being talked about. Zomato is now almost nudging that 100 level. Or Kunal, did it touch it intraday today?
Yes, it crossed 100.
Crossed 100?
Yes.
What next then on the cards? It's already a triple-digit stock.
So we discussed this, I think, yesterday morning, and I was mentioning that this could be a fresh wave of up move for Zomato. And in this leg, I would expect 120 as a target for the stock price, and that's a retracement, or rather an extension, Fibonacci extension target for Zomato. So, the pause which had happened for the stock at 104 levels was almost a 61.8% retracement, a classical retracement. And from a classical level over there, the stock fell back towards 88, 89 mark, which is again a major retracement support, 23.6% retracement. So when in terms of that extension chart, the next targets for the stock is around 118.9, which means closer to 120 is where I would look out for a target on Zomato.
Okay, from Zomato, let's move on to the auto sector. And the government, it seems, has agreed to the long pending demand of the auto sector to extend the PLI benefits by another year. In fact, we're learning from our sources that the government has also agreed for quarterly disbursement of incentives for better fund flow. Samir Dikshit, my colleague, joins in with all the latest. Samir, what are you picking up from your sources?
Giving a big boost to the auto PLI, the incentive-based scheme for the automobile sector, the government has agreed to give an extension of 1 year for this scheme. The scheme which was rolled out last year in the year 2022 was there till 2027, and now the government has decided to give an extension of 1 year and it will be there till the FY 2027-28. With the extension of 1 year, government understands that this will help to attract more investment from the auto players, and not just this, the investment part, but also the scaling up of manufacturing capacity as well. The auto players will be encouraged to enhance their manufacturing capacity. Moreover, this will also attract the new technology in the entire sector. So, based on the feedback and also the request from the auto players, the government has agreed to give an extension of 1 year to the entire auto PLI scheme. And not just this, another bold decision that government has taken. Based on the request from the auto players, the government has decided to disburse the incentive quarterly rather than the current structure. Currently, the incentive is disbursed annually, but now government has agreed to disburse the incentives quarterly, and government understands that this will help to boost the morale of the auto players or those players who are beneficiary of the PLI scheme. So this entire PLI scheme, which is having a quantum of around rupees 26,000 crore as an incentive-based scheme, currently it has got 18 applicants. More applicants are likely to join, are likely to submit their proposal for the DVA, the value addition certificate. And government understands that this will also help to generate more jobs in the country.
Deepak, what's been your last purchase in this market, and where are you looking at exiting completely because you think the valuation or the template is now shaky?
So we generally don't get out on just valuation alone. The business has to have some kind of a negative trigger going forward. I think we've just pared down at this point because certain stocks have run up a little bit and they've breached our upper levels of percentage ownership. But right now, we've not exited much to be honest, we've added, a few players, we're still buying them, so I'm not going to name a lot. We're doing something in the digital entertainment space. We've added a lot more in terms of both public sector and private sector players in the electronic manufacturing space. We've added some players in the defense and rail spaces. The idea here is, of course, that India's move to import substitution will benefit these companies disproportionately. In the process, I think the last few months, the only exit that I've really had is, I think, Siemens, because of some corporate governance issue which we weren't very fond of. Of course, that is now behind us because they've cancelled that sale of a unit to their promoter. But once you've told us what the intention is, it's not easy for us to kind of go back in there and say, well, it'll be okay the next time. So that's it. We've just been adding very little churn these days. Markets have been kind. So, but I'm actually looking forward to a couple of more sectors. There seems to be a turnaround in textiles. There seems to be something happening, early stages happening in chemicals. So looking forward to some of that. We may end up replacing some of our stocks if we see a 3 to 5 year trend, especially in the special situations that we have. I think a 3 to 5 year trend will be a good thing to kind of switch now. We haven't taken the decisions yet, but research is on, especially in these two spaces.
Kundan, just today at 9:30 a.m. from Tata Chemicals. Let's listen in as to what he's saying about the longevity of this uptick that one is seeing in prices.
Our view is that the demand is going to increase to almost 80 million tons, and there's about 4-5 million tons coming in capacity. We need to bring more capacities on stream, and we will continue to maintain a very balanced approach to this market because customers need the material and we need to bring that on stream. That's it. We made two bets which were coming out of our lab in the area of nutrition, another one in the area of silica and rubber chemicals. And what has happened is the rubber chemicals and tire chemicals has played out positively. And we are taking a longer time to build our prebiotics portfolio, which has been fundamentally taking longer than what we would have anticipated. It's just we bought stake up to the level permissible by the stock market, by the regulator, which is about just below 5%. And I think the rationale remains the same as exactly as we had held before. And the idea is to build a very strong specialty engine for Tata Chemicals, and Rallis offers that platform within the Tata Group. And we've had to sort of fix some of the issues on the ground, especially with the seed business. But I think that is behind us more or less.
Well, just in case you were wondering that it's turning out to be not bad a day for equity markets, look at the Nifty because it's completely given up all of its gains. We're at 19,374, pretty much where we left it off yesterday. What's turning the tide for the markets? It's banks once again. SBI is now down over 1% in the futures, ICICI Bank, and look at the intraday graphs because that massive chunk of selling has really come in the last half an hour or so. ICICI Bank is back to 960 odd levels. Similar is the price action with the Kotak, HDFC, which are now drifting lower and lower as we speak. Reliance as well in the red. It was just flat a short while back. And there's L&T as well, which is mildly soft. You can skip L&T. It's been a rank outperformer. But yeah, private banks and, Reliance has been the one which is weighing heavy on the markets. Even L&T, the fall has really come in the last quarter, 1 hour or so. Europe, by the way, has started off a little wobbly, one must say. You've got DAX, which is down about 0.5%. CAC as well lower by 0.5%, and the broader stock 600 index as well is marginally soft as we speak right now. Just want to see what the pre-market rates for US futures as well are. While they are little changed, so flattish but with a negative bias, and this is after a strong handover that we had overnight yesterday. But Naresh, just wanted to check on the Nifty Bank because that's the one which is looking like the weakest link right now.
So the Nifty Bank, as we see it, the cases, two of the largest weights are HDFC Bank and ICICI Bank. Both have been sideways for quite some time now. So after breaking out into a new all-time high at 960, ICICI Bank has seen no follow-up price action. Same is the case with HDFC Bank. It stays around 1600 plus minus 20 points. And then when we look at Bank Nifty, the lows for May, June were closer to 43,500. The August lows were around 43,600. The highs around 45,000. So we are stuck in this band right now. We saw recovery in the last two sessions from 44,000 level. So we are right in the middle of the range. So till the time we don't break 44,000 or 45,000, it's tough to take a trading, say a trending view as of now. But the bias is positive because the overall banking space, apart from the heavies, is still pretty positive. So for now, it's a buy with a stop loss with 44,100 as a stop loss on the Bank Nifty.
Let's take in some closing ideas as well. Naresh, you only go first. What is it that you're going to recommend?
So that would be a buy on Indian hotels. The stock has hit a new 52-week high as well as a new all-time high. Could see more follow-up action over the next few sessions.
Kunal, what about your closing strategies?
That'll be a one. Tata Steel, after quite some time, the stock has broken past about this 118-19 barrier. So would suggest a buy. In fact, look out for Tata Steel as a closing bet and look out for targets close to 130.
Deepak, chemicals coming back, pharma coming back, metals coming back. But China is not coming back. Anything which China consumes is coming back. How unrealistic is this, right? The consumer market which consumes metals, chemicals, pharma, API, that economy is not coming back, but the stock prices and inflationary trends have come back. Why is that?
It's a good question here. I think, it's China is a competitor in the exports of all of these things as well. So it's one of the largest exporters of metals, steel. I think China exports more than the next 5 countries combined. Or produces more than the next 5 countries combined. So while it is a consumer, it's also an exporter. When consumption reduces in China, the players who actually produce this stuff will actually increase their exports. And if there's demand, of course, that will potentially crimp growth of any other player in this space. But I generally feel that China isn't a big importer other than from Australia and perhaps Japan. It doesn't import much from India, for instance. So their slowdown affecting us is going to be much more downstream. So it will have to affect another country, and then that country will have to, impact us per se. So I think at some level you're seeing some prices, go up, but I don't know how sustainable they are, especially of all the commodity level elements. I also believe that we're probably in a period of flux right now because US interest rates and Japanese interest rates, more importantly, will determine the state of the world economy. And India might not get so badly affected, but we may get hit in the crossfire if rates go up tremendously abroad. So I don't think it's the right time to make that decision on China. But China has other problems on debt and stuff like that, and that can affect, again, it will take 2 layers before it affects us. Most of the Chinese debt is owned internally. I would say right now, look at China only from that debt market explosion or implosion kind of a view, not really from a demand kind of a view. Its demand is not going to change things meaningfully for Indian exporters or Indian producers.
Deepak, great to have you on the show. We'll let you go on that note. We are talking about a cool-off in the market. Just want to bring up what Jio Financial Services as well is up to. Remember, as of yesterday, it was locked in upper circuit for a second consecutive day, and nothing changes today as well. Still locked in that 5% circuit, 231 plus levels. Remember, we were the first ones to tell you that founder firm Jamnagar Utilities bought 25 million shares, each in BSE as well as NSE, as of yesterday. In a bunched trade, and that stock continues to hold high. On that note, we're going to take a very quick break. When we come back, we'll track the last half an hour of trade this afternoon.
10 points higher for the Nifty, in fact flat actually, off 100 points almost from the day's high. You've got Bank Nifty which has fallen now, and hotel, some chemical names, few names from the IT basket, that's about it. The market from the day's high I think has taken a turn for the worse. The bank Nifty has actually fallen, led by HDFC Bank. Dipin Mehta, they say time heals everything, and in markets, that's what patience is rewarded. But when it comes to HDFC Bank, it's patience and time both, and shareholders are not getting rewarded.
Yeah, good afternoon, Nikunj, and thank you for having me on your show. Well, you said it right. We need to have more patience when it comes to HDFC Bank. And I don't know, at some point of time, this particular underperformance will reverse for sure. I mean, if you expect the bull markets to sustain and you expect that banks will be the driving force, then how can the largest bank by market capitalization be left out so far behind? Just think of the way Reliance Industries moved, right from 2018 to 2020 or 21 also. It had a fabulous outperformance. And that's what large cap stocks do. They have that period of 5 to 6 months where they really rally and they almost go by 40, 50%. And I think that, that's something like that would play out in HDFC Bank as well. It's like a spring, which is being continuously wound. And at some point of time, it'll shoot up like a rocket. There have been some integration issues, and last quarter was still only HDFC Bank numbers. But as the quarters go by and we get a complete consolidated picture post-merger with HDFC, I think some of the uncertainties around the merger would be over and done with. And then people may realize that this stock is trading at attractive valuations. And therefore, you could have a P price to earnings re-rating taking place in HDFC Bank. So I remain firmly convinced of the HDFC Bank story, and management guidance to double balance sheet in 4 years' time means that they're looking at 18% type of credit growth, and that's fantastic at their scale.
Naresh, I don't think the debate is that, whether this is a compounding story or not. For decades now, we've seen HDFC Bank has rewarded shareholders who manage the patience game. But in the very near term, do you think there is any scope of a revival? What are the charts reading?
So the view has been the same on HDFC Bank, going nowhere. We need to wait for price action to confirm. 1530, 1550 is a support, 1700, 1750 is a resistance. And the price action has been terrible. Even before the merger got announced, it was stuck in this band. So for now, it's very difficult to take a call at 1580, 1600, whether it will go to 1700 or break 1530. For now, given that the whole banking space has done well, would assume that it doesn't break 1530, 1550. But momentum reversal is yet not seen. So for now, it's sideways only.
Okay, you got HDFC Bank, which has actually taken the blow, so to speak. Now, a lot of mid-cap stocks, you got packaging companies which are doing very well. You got Shakti Pumps, Sri Venkatesh Refineries. So the mid and the small cap indices have actually hit a new high, and this is happening irrespective of what is happening in benchmark indices. Also, power is one theme where the price action, I think some would say, has really moved from genuine good power utilities to companies which exist with very little scope of profitability. I'm not getting into specific of names here, but look at the assortment of power stocks here. Top gainers in the power space, a lot of them are actually sub 20 rupee stocks or sub 50 rupee stocks. I mean, NHPC is a government-based company, but let's say if you look at JP Power, you can throw in a Reliance Power, you can throw in a Ratan Power. A lot of these stocks are just, moving on current of 440. So Dipin Mehta, outside every power transmitter or a junction box, there is a sign which says that if the power voltage is high, it could hurt you. The danger sign, remember? The skeleton and two bones.
The skull with the bones.
Yes. Yeah. Is that where the power sector has moved now?
Oh, no, that's a bit of an exaggeration, Nikunj.
No, for small cap stocks, for small cap power stocks which have no relevance, no capacity, nothing, and they are up 5, 10%.
Nikunj, you're in a bull market, no denying that, and there's going to be heightened speculative activity, which is what we are seeing. And concentrated buying in a few of these small cap companies can have this exaggerated stock price movement as well. Sometimes the performance follows the stock price movement. These are great times in terms of the capex cycle, and a lot of the power equipment companies should be looking at very good numbers. Raw material costs also are pretty much stable, and base effect to come into place as well. So I'm not that perturbed about maybe there's too much of frenzy in a particular segment. It does settle down as well. But by and large, I think with mid-cap indices reaching at new levels, it's a great time for patient investors who have been around for a long time. They are seeing fabulous gains in their portfolio. And I know that the real issue here at hand, everybody is asking is where is the correction? Where is the correction? Everywhere I go, people ask me that question as well. And the answer is that we don't know when it will be. But the fact that people are still talking, where is the correction, means that they are to an extent underinvested. And maybe the correction is some way away.
Talking about the packaging stocks, let me take it across to Sharad and find out exactly why is it that they're all rallying. Sharad?
Well, yes, in focus, we are having the packaging stocks, and what we are gathering from our industry sources and channel checks is there is a realignment happening of the entire supply chain. Now, do remember that the supply mismatch is expected to come down, especially for the domestic market. Now, earlier, what the domestic manufacturers were doing is that earlier they had actually curtailed their overall output because of the lower contribution margins happening. So a kind of an improve or impetus boost is expected, at least on the supply side. Now, of course, the trigger is important because the demand side is also being met, and this is coming, especially demand and inquiries coming from the pharma and the FMCG segment, and that is expected to pick up from the mid-September, as well as also the festive season is also picking up. Apart from this, the Q3 operational margins, they are expected to go up as well, and also there is a lag effect when it comes to the packaging companies, and the benefits of fall in crude prices are actually trickling in as well. Looking at, of course, the stocks itself, we have Nahar Polyfilm, Polyplex, Jindal Poly, as well as Uflex, where most of the majority of the stocks in the packaging space have actually fallen between 25 to 46% on a 1 year horizon, and the valuations also, most of them barring Polyplex having almost a 33 times EV EBITDA multiple. Most of the stocks in this space are having or trading below the valuations of 10 times of the EV EBITDA multiples.
All right, the Bank Nifty day trader. Now this is the underperforming index for a sector where the expectations have been the highest. But markets, they go through phases of time-wise correction, price-wise correction. Even though the big picture in terms of where banking, where economy, where NP, and where the cycle is headed, I think those factors are intact. But the reversal, I think, is very sharp. Naresh, is it back to square one just when it appears that the market bulls were on a front foot, an odd day pushes you on the back foot?
So the view remains same as I said in the morning. Buy on dips. This is a good entry point at 19,300 to 350 levels. Would keep a stop loss at 19,250. And the volatility would continue even tomorrow. There is a huge MSCI buying selling rejig which should happen tomorrow at 382, 330. Could be a large one. So there will be volatility today as well as tomorrow. And from Friday, it could be a better way to look at it. If you look at what is happening in the broader market index, that is much more clear. We are almost up 1% on the mid cap index, as well as the small cap index, as well as everything beyond the heavyweights. So the viewers, post this reject based volumes goes off, there could be a bounce back towards 19,600. So that's my view. Would keep a stop loss at 19,250 and go long at current levels.
This falling market, there are lots of bright spots. We've been highlighting as to how the packaging names are looking good. The hotel stocks have really been on a tear. And then, of course, there are individual cases like a Zomato. And I'm not talking about the block deal here, but no surprises that HSBC is already up their price target, considering Zomato already hit that triple-digit mark today. So from the earlier 102 price target, they've upped it to 120 now. They're saying that they have a conviction on the long-term value of Blinkit. They're valuing it at $5 billion, which they say is a bigger value unlocking than their food aggregator, core business. They're saying that Blinkit itself can see 6 to 7% of a move and 3 to 4% EBITDA margin uptick as well. They're saying hyperlocal can be a much bigger business in the long term. Dipan, we are already at 100 on Zomato. I mean, the market has clearly, moved it almost 60 odd percent year to date from those 40 odd lows. Would you still recommend buying into Zomato, if at all you like the story?
No, certainly we like the story, and clearly the management is following through on its plan. The food aggregator business has certainly turned EBITDA positive, and that is quite impressive. And going forward, I think that particular division will get solid into profit. It's just that I still remain a bit uncertain about the quick commerce business, the Blinkit division, which they have acquired. maybe the break even over there is a few quarters, maybe a few years away or so. And that's a business, of course, which is much larger than the food aggregation business, but it is something which will have a higher gestation period as well. So from that point of view, I just have to be a bit cautious at these levels. Stock has run up significantly, and maybe at a correction, it may make more sense to enter into Zomato. And I think that's true for many mid-cap stocks as well at this point of time, that a lot of these stocks are run up 30-40%, even doubled in the last few months or so. So from a margin of safety perspective, from a risk return profile perspective, it's better to just wait and watch and stay away from making at least fresh purchases at these levels, because maybe you could be caught on the wrong foot. So I would just like to, have a note of caution over here that no doubt medium term, long term trends of the stock market look fantastic, but maybe the market has got slightly overheated at some point of time, especially in the mid cap space.
100 rupees for Zomato. So Dipin, are you still holding on to the other ones? I think we've discussed Paytm and you've called it a hyper growth company. But at what closer to 1,000 rupees is now Paytm also a stock where you should wait for a decline or take some profits off the table?
See, I think if you have a trading mentality, then certainly these are good levels to take some profit off the table. But from a longer term investment, it's just that don't make any fresh purchases in any stock. That's the kind of mantra that I'm just thinking about at this point of time, that even if I have cash in my portfolio, I don't want to buy at these levels. I just want to wait for a more serious correction, where at least you get stocks maybe 15-20% lower or so, and that would provide you with some margin of safety. Because the worst thing which happens over here is that you buy at these levels and you have to see 10-15% correction in the stock counter that you have bought, and that certainly does tend to get disappointing. In any case, investors that I know of are more or less fully invested. We ourselves are. So even if you don't buy at these levels and you miss on maybe another 5-10% upside, I'm perfectly fine with it. So it's just that we just want to try and get the entry level for any fresh investments in the market. Just want to wait and watch and try and get the entry level right when there is a correction. And mind you, the correction, whenever it comes in the Nifty or the Sensex, will be more exaggerated in the mid cap counters, because they have gone up on account of concentrated buying. They will come down also when there are sparing up of positions by the traders over there. So these mid cap counters, which you see jumping up by 10-15% every day, do keep in mind that they can correct also by 10-15% on a single day.
Quickly take it across to Sharad and get in what the dealing room buzz as well is, considering the markets have completely given up their gains and banks are the ones which are caving in. Sharad, any individual stocks which are propping up though?
Well, yes, in focus we are having our as financiers, and what we are hearing from the dealers is that there is a buying scene in certain counters for the domestic institutions. Now, even the volumes itself, if you look at it, they're coming in at almost 11 times its 20-day average, and the key DI investors already invested in the company include the names such as Kotak Mutual Fund as well as Invesco Mutual Fund. Now, we did look at the valuations also, and currently the stock is trading at almost 3.1 times its 12-month forward price to book ratio, and if we compare it with a 5-year average, that is still on the higher side of almost 4.2 times. Now, going ahead, management has given a guidance and they have maintained it for the AUM growth of 20 to 25%, while the street has been actually skeptical when it comes to Q1 numbers because of attritions being seen. But if the ROE numbers are maintained between 14 to 15% and NI growth is there, then the street can expect some earning upgrades coming in for the stock.
Just a flat day of trade. Frankly, just what is important here is that you've got real strong sustainable gains in the entire hospitality space, stroke the hotel space. Dipin, we keep on discussing this perhaps on a daily basis, that what is the best way to really participate from a stock market standpoint, given that soon Cricket World Cup will start. And that is going to be a bonanza in itself, whether it's travel, whether it's food delivery, whether it is eating out, whether it is liquor consumption. This really could be a theme within a theme for next couple of months now.
Yeah, that also, and look at the kind of festive season planning which is taking place. I think if you speak to retailers, be it in electronics or consumer goods, or even some of the other consumer-oriented businesses, they are revving up to having a fabulous festive season as well. Maybe some amount of dampener because of a subpar monsoon, But by and large, I think we are going to see hectic spending taking place over the next few months, right up to December. And consumer-facing companies, be it retail companies, could be specialty retail companies, the likes of Metro Brands or Manyavar or Campus Activewear, which have underperformed. Then you have Titan, Trent, they could do well. I think companies like Jubilant Foodworks, Devyani International, which last quarter disappointed because of various reasons, they may start to do better. And companies like Indian Hotel and Interglobe Aviation may build on the kind of gains which they have got and the kind of base which has got created. So you're going to find a lot of interesting ideas on the consumer-facing stocks. And these companies, of course, as we speak, are on the expensive side. But if the earnings surprise us, I'm talking about the December quarter earnings, if they surprise us, then you could see a further up move in these stocks. But at present, I think they are more or less well priced, and partly some of the growth has got priced in.
Banks are falling, little bit of shakeout. Hotel stocks are not falling. Pharma is holding very, very strong. I want to look at Aurobindo Pharma. Why am I looking at this odd one out? Because it's, in a sense, really represents the strength of the comeback in pharmaceutical. A bombed out stock, nobody liked it, nobody believed it. Sub 400 has become 800 plus. Kunal, is the best of the gains in Aurobindo Pharma, is that behind us? Because this, in a sense, has been the flag bearer of comeback in pharma.
Yeah, in fact, I would believe best for the gains for most of the pharma stocks is actually behind us, because over the last 2-3 weeks, I remember I think 2 or 3 weeks back, most of the pharma stocks were going into a different level of a breakout. Sun Pharma closer to 1200, Glenmark was around this 800, 820 odd mark, Zydus Life, Cipla, etc. These stocks were going all guns blazing. But now, what has happened is that these stocks have gone through a major topping out in terms of most of the indicators. What I would probably expect is that pharma stocks would come back into that neutrality phase. And when pharma stocks, for example, traditionally these are considered as low beta because you have beta of 0.5, 0.7. Now all of a sudden when you see the beta shifting to 1, 1.5 for these stocks, there has to be a point where the beta comes back into neutrality, and that takes a process of at least 6 months or so. So I would probably be not too much bullish on a medium term. That's by a 6-month perspective for most of the pharma stocks. You may have the 5%, 7% rally every now and then after a phase of correction, but as a materialistic up move for the pharma stocks from the previous month highs, I don't expect too much of a gain on the upside.
Right, okay, that's the take coming in on pharma. Let me quickly take the BTST trades as well going before we wind up for the day. Naresh, on your list?
So that would be a buy on Indian Hotels, new 52-week higher, stop loss at 411 and a target price of 425. Second, a buy on Axis Bank, again another stock which hit a new all-time high today. Stop loss at 987, target price of 1020.
What's on your list?
So Chola Finance is one of the stocks which looks attractive. It's confirmed a breakout of the 50-day moving average after remaining below it for the last 1.5 odd month. So would suggest a buy 1160 as a target, stop loss at 1098. And Hindustan Copper is something which I've been advising earlier with a target of 165. So maintain those targets on the stock and stop loss at 152.
Right. It's the OMCs which have cracked really hard today. But Dipan, great to have you on the show. We'll let you go on that note. The market now is fearing that probably the next government could ask maybe OMCs to cut petrol and diesel prices. That fear in itself brought about a fair amount of pressure on OMCs today. And, the kind of pressure that they could see in terms of their GRMs or gross marketing margins, GMMs in this case, if they were to really lower prices. So that's one segment which is really cracked hard. Banks, like we pointed out, they as well completely changed tide. So SBI, ICICI Bank, HDFC Bank, Kotak, they all fell off from the top of the day. L&T, RIL have been the weak links as well. Although RIL did not fall too much, but it has fallen in the last couple of trading sessions as it is post its AGM. Bajaj Finance, Finserv, mildly soft for L&T as well. Adani Ports was a little lower too. Hero Motocorp, Divi's, UPL, these were some of the rank underperformers today. Having said that, there was strength still in some of the metal names. Tata Steel was the one which managed to top the charts even on closing. So almost a 2% gain coming in there. Maruti, M&M, iShares held out very, very smartly today. So 1 to 1.5 odd % kind of gains coming in across the board. You had Infosys, HCL Technologies, TCS, even ITC managed to latch on to the green. That also held out quite okay. So IT as well managed a decent move. Of course, the star performer today has been names like Escorts. At a time when the market closed in completely off the session highs, Escorts has managed a gain of 7.5%. It's managed to close in at the peak of the day, along with Indian Hotels and Jubilant Foodworks. 6% and 4% gains respectively coming in. And yes, BHEL has got to be the star of this week. Today too, another 3.5% move coming in there as well on the futures. But on that note, we're going to wind it up on this edition of Closing Trades. Thanks for watching.